All right, let's do a little live trading here. Bell just opened about 7, 8 minutes ago, and I think I'm getting a little better over the years of just waiting because let's take a look at the 60-minute chart on the MES, the micros for the Nasdaq right here. You see this breakdown. Here's the 200 moving average. Here's all the support down here at this level. And when it was starting to roll, and I love it when you get a consolidation and a breakdown, but that's already happened. Okay, now we're coming into some trend lines and an uptrending 200 into support levels. We don't know how far down it's going to go, but now's not a good time to short for me. Right here, when there's room, when there's space, that it closed, it just closed that space. When there's space for it to come down to the 200 moving average, as it's ignoring the green bar right here, this green bar, that's my sell. Now, what did that look like over here? What did that look like over here on, the 1,000 tick chart, for instance? Well, there was plenty. There's a beautiful trend line break set up right here, right? And we could have shorted any of this area right here, all the way down to the bounce right here off the 200 moving average. And now I don't want to short. I was thinking about shorting right here, and I'm thinking, why would I try to get this to go down further at this point? Let it come up. Let's see what it's going to do, and then possibly short at that point. So I just want to make that video today. That's where my mind is. That's kind of the thinking process nowadays after years of trying to get this. But I think having to be in a trade is subsiding in my life, and I'm glad, because having to be in a trade at all times has gotten me in a lot of trouble. Scouting out, hunting a trade opportunity is becoming more exciting and rewarding to me than actually taking the shot. So really scouting out and looking for a trade needs to be the excitement. So I want that to be the excitement other than me having to be in a trade, right? I like this setup right here, but if I take it, I got to get out eventually. I got to get out immediately, right? So let's see if this is going to work here. I'm going to take a trade.
Order filled.
And the stop is either going to be the trend line down here or down here. So I have to make sure that I get out when I say I'm going to get out. I can put a hard stop in, or I can just eyeball it and see what happens. Let's see if this trade works at all or not. All right, let's see what's going to happen here. I'd like to get at least 1-to-1 on this. I noticed these higher and higher marks, so I just picked the one that's right here, the closest to be my stop loss. If I did not take the trade early, I could have took it right there off that trend line and used that. That would have been, this is a better opportunity right here than where I got in. So I'm kind of disappointed. I almost added to the trade and used this as a quick stop loss to get out of both of them. So, and it still might just come down and stop me out, but it doesn't look as good now after coming down to the trend line, but it still hasn't come down all the way. And like I said, it's such a bearish day. I guess I'm counting on it more likely bouncing off of this area, but it could come back down to that area for a double test and stop me out. So hopefully we are assessing this properly, and we're using risk management. You got to use risk management. You can't just stay in the trade and keep adding and adding. This is not a $250 risk. This is not a $250 plan. This is not that trading concept. I am just using a quick, more or less $50 stop loss. So let's see what happens. Okay, I just closed the trade. I don't want it to stop me out. You might say, well, what if it goes in your favor? Hey, it didn't do what I wanted it to do when I wanted it to do it. The trade visualization that I had was this was rounding out and it was going to continue. It did not do that. So I'm going to stop myself out before it comes all the way down. Let's see. It's going to be interesting to see, if it would have stopped me out anyway. It's always interesting to see that. But, regardless of whether it does or not, and it did, it would have stopped me out right there, right on the tick. No, not yet. But the point is, I'm learning over the years that the trade's got to do what I think it should do. And if it doesn't, then I hear traders say that when I watch them on their live streams and stuff and watch videos. I'm like, it's starting to make sense to me now. If it doesn't do what it's supposed to do, get out. And that means you're not understanding really what's happening is, yeah, you're not understanding the rhythm. Very important to be in sync. You know, there's days when I had four trades and all of them worked. I understood the rhythm, and the trade did exactly what I wanted it to do, and I love it when that happens. But yeah, it would have stopped me out. It would have stopped me out right here instead of way up here. So I saved half of that stop loss, and stop you out and go right back up is what it can do. I'm going to try to be, I'm looking at this up here. I'm thinking, you know, see how it went up and it's starting to roll back down. I'm like, I don't really want to be in this now. When I got into the trade, it was green above. It put a pintail in off of and it closed green again. So it was two green candles. One closed above it. A pintail came down and closed above it. I said, I want in that trade. Then we get a red bar closing below it, a pintail that tests up and comes right back down, another red bar, and I'm like, you know, why should I just stay in this trade? So it didn't do what I wanted it to do, so I got out of the trade. So that's the video today. Trying to be in sync with your trade and get out if it's not performing the way you want it to, and wait for better opportunities instead of just jumping in a trade and trying to be in any trade at all times. So that's what I want to remind myself in this journal video. I'll see you on the next take. Peace.